Welcome back. I'm Pratap here. Today is the 10th February 2025. In this video, let us evaluate the performance of high liquidity zones generated in our previous end of the day report. Even before that, all of you please understand we are providing complete free training on supply demand zone price action. Some of you might be knowing the cost of the training is over 8,000 US dollars. But we are providing complete free training and all the training lessons are available at our NeoStock YouTube channel. Okay, to access the training lessons at our channel homepage, you just click on the tab Posts. Some of you might be seeing the tab Community. Click on the Community tab. You get access to this post. This post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into supply demand zone price action course. Here I kept all the training lessons. You need to start your training from lesson 1.1. That lesson is available at the bottom of this page. Just scroll down to the bottom of the page. Here, starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one. But you should learn all these lessons according to the training instructions I mentioned at our Telegram channel. You can join at our Telegram channel. I provided the link in this video description. So once you go to the Telegram channel, at the top of the window, you can find pinned messages. Click on the pinned messages. You can find all the training instructions I have provided. If you learn this course according to my training instructions, definitely you will become a very good independent trader in the next 3 months time period. Okay, now let's get into analysis of the high liquidity zones. So, previous end of the day report, we identified 4 high liquidity zones from daily and 75 minutes time frame. NBCC is the one gave a trade, but it gave couple of trades. One is stopped out and another one is successful. I can say partially successful. Why we will discuss. First, this is a 75 minutes high liquidity zone. This is the one, rally, base, rally. Below we have a daily high liquidity zone is there, below this. This rally base rally is a 75 minutes high liquidity zone. And the one below we already fine-tuned earlier, previously. But today prices entered into this zone as per our software suggestion. Okay, this 75 minute zone we should fine-tune with 15 minutes time frame. So let me go to the 15 minutes time frame. 15 minutes we have 2 order flows. This is the first one. This is the leg-in. You have a base candle. You have again with the hidden body. There is a rally candle with hidden body. Invisible zone. You already learned in lesson 9.3 and 9.4. I explained the concept hidden body and hidden zones concept. So accordingly it is a rally base rally. Okay. This is the 15 minute zone. And we have one more 15 minute zone here. We have a drop candle. We have 1, 2, 3, 4 medium size leg candle part of the base. Okay. So that way we have 4 candles in the base and then a rally candle and a very big follow through candle. Huge candle, large candle. So these are the 2 zones we have, 15 minute zone. Again, these 15 minute zones are fine tuned with 5 minutes time frame. Let me go to the 5 minutes time frame. We have a drop candle, 2 base candles, again with a hidden body. It is a rally candle, drop base rally. Okay, this is a fine tuned 5 minute zone. And more our pro gap is also there in this area. And also there is another 15 minute zone here. We have a drop candle, base candle, medium size candle is also part of the base. And then from here the movement is started. imbalance. Basically not drop, sorry, rally. It is a rally base, two base candles and medium size leg. We can also include because this is not closed outside the zone. So that's why this candle also comes into the base. But actual leg out formation is started from these candles, follow through candles. So this is the way we identified the 5-minute zone. Fine tune. And what happened today when once the market is started today morning, this is a 9:15 candle, prices slowly went into this zone. Sorry, not today. This is on Monday, 1 week back. Today's situation is here. Yeah, here. Today morning 9:15 prices came. And finally when they reached morning 11 o'clock. 11 o'clock prices went deep, slightly pierced and sharply prices moved up, but not good enough to get 1:3 RR. Again prices came, they were struggled again. This was holding the prices here for some time. And finally it is violated. It took a lot of time. Why it took a lot of time? What made the reason? After, see, these things we can analyze only after the price action happened. It's not easy. Here I identified an interesting thing. A 3 minutes zone is there. That is overlapped with this entire 15 minutes fine-tuned zone. Let me go to 3 minutes. You will get clarity why something is holding the prices there. Now see here. We have an excellent drop base rally. Sorry. This is the one. Drop base rally. So this is the one holding this entire 15-minute zone. Not 15 minutes, sorry for my mistake, the 5-minute zone. We have a fine-tuned 5-minute zone, right? But the real order flow is here. Previously it picked up the orders from here and prices moved, and this is the one holding the prices actually. Time being, let me delete this 5-minute zone, you get clarity. This 3-minute zone, it is worked like a high liquidity zone for some time. The reason why something holded the prices here is, what the hell, what kind of mistake I did. Sorry. The biggest problem is I went to a wrong zone. Yeah, here I have to. So that is what I'm wondering. So here you have rally base rally. This is the origin for this entire 15-minute zone. See here. Sorry. I'm deleting 5-minute zone. Actually this 3 minutes origin, rally base rally. See, we limit ourselves up to 5 minutes. This is only post-mortem analysis. After the price action happened, then only with curiosity, I looked into the lower time frame zones. Then I identified this 3-minute zone is very interesting here. This is the one probably institutions kept a huge order flow. But the main analysis, this 3-minute zone is not identified. Main analysis means before market starts, we fine-tune the zones and keep it ready for our analysis. In that zone, this is not identified. Please understand this point. The zone is pierced, multiple times pierced, holding the prices. Then I got the curiosity. Because I know maybe some lower time frame zone might be there, that might be holding. That way I went to 3 minutes. Then interestingly, I have seen this rally base rally, which is the origin for this 15-minute zone. This rally base rally is a 3-minute zone. See, generally we limit to 5 minutes when we look for lower time frame origins. Because 3 minutes and all many times may work or may not work. But today, interestingly, this rally base rally is holding. But even though it is holding, it is not good enough to give you the profits. See, from here it picked up the orders and moved up. But it is not good enough to give you the profits today. The reason is this rally base drop, this is another 3-minute zone. This is having even much stronger order flow. This is completely not letting the prices move up to the 15 minutes target. Why today maybe the supply is much stronger than the demand? Because some of you may ask, why, what could be the reason? You know the reason. Today supply is much stronger than the demand. Maybe it is this order flow in this zone is not good enough to hold the prices compared to the supply. But some order flow, considerable order flow is there. That's why multiple times it was able to hold the prices. Finally, the entire demand has been consumed. Now supply pushed the prices down until the next fine-tuned 5-minute zone. And that way this trade is stopped out. But anyway, I am not calculating this 3 minutes losses. I am calculating for 5 minutes only, because that is the one we are, because ultimately we take trades at the fine-tuned 5-minute zone. If fine-tuned 5-minute zone clarity is not there, then we look for a 3-minute zone as a supplement. But here we have a clear 5-minute zone is there. So this is a clear 5-minute zone, drop base rally with hidden body and pro gap. So obviously we have to accept this much loss. 3 minutes is a smaller loss compared to 5 minutes. But this is our original analysis. This drop base rally is our original analysis. Even if I draw the zone, or even if you draw the zone, it is the same. There won't be any difference. Because clearly we are seeing drop base rally here, which is a fine-tuned zone of 15-minute zone. When this zone is violated, obviously how much loss we get, including the stop buffers. NBCC has given 1,682 rupees loss, which is 1% ROI, negative ROI. On your investment, we lost 1% of our money. Okay, that is acceptable, because maximum acceptable is up to 2% is there. Compared to the half of the loss only we got. Okay, after that again finally what happened? Prices reached this second fine-tuned 5-minute zone. Multiple times it stayed here. Okay, anyway, at around 2 o'clock 10 minutes you would have taken a trade here. But unfortunately what happened? See, initially our target is this 15-minute zone. Here we have a 15-minute zone. This is supposed to be our initial target. But what happened? After you took the trade, instead of prices sharply going up, this candle was closed. After you took the trade. While you are on the trade, this is an ongoing candle. Many times what happens in high liquidity zones, prices reach and then sharply it will move up. See, same thing happened even in this zone also. See, prices came, slightly pierced, and see sharply how it moved up. See the wick. Such kind of thing did not happen in this trade. After some time, maybe after 10 minutes, this candle is closed. When this candle is closed, now what will happen? You need to revise your target. Because here a new zone, you have a leg in here, failed ERC, you have two base candles and you have a drop candle, then immediately this is going to be your new 15 minutes target. You may ask a question, but from here to here we won't achieve 1:3 RR. Yes, you can't achieve, but already you took the trade. Because as per your earlier trade plan, this was supposed to be your target. From here to here you have 1:5 plus RR is there. But unfortunately what happened? After you took the trade, a new 15 minutes candle has been formed. Because a new 15 minutes candle is formed, now whatever the situation, whether you have RR or not, you don't care. Why? Because a new 15 minutes target is formed, whatever RR it gives, even if it gives 1:1 or even if it gives 1:0.5 RR, you have to exit. If you don't exit, what will happen? Again it will push the prices. This time zone might be violated. That possibility is there. So that's why we have to exit here. So when you got the trade, according to the 5 minutes, here we got the trade morning, at 2 o'clock 10 minutes you got afternoon, and then reached the target at 14:40. So that means within 30 minutes, it reached your newly created 15 minutes target. But see, look into this 15 minutes, how it is holded the prices. It did not let the prices go above this. Here prices reach till the proximal line. Zone is not violated. Just touched the proximal line. Just touched the distal line. And then again it pushed the market down. Why it happened like this? Why it is holding the prices here? With that curiosity, I looked into the chart. There is again a 3 minutes high liquidity zone is there. See here, you have a drop, base, drop with the hidden body. This is a drop candle. This is the 3 minutes drop, base, drop. This is a holding. Actually, this is holding the prices. And the real order flow is in this area. See, first time prices came here. Again rally, base, drop. Again created. LVTL zone is created. Again you see here rally, 2 base candles. Again drop candle is created. Again last time when prices again reached here, you see what happened? Rally, base, drop. But actually you cannot consider this as a base. This is a large candle. But anyway, even suppose if you consider this is a base, then this candle is also same as the base candle. Then this should be drop. But this is not a great leg out. But some kind of formation happened here. So maybe this is a 3 minutes high liquidity zone. That's why holding the prices multiple times. But anyway, all these things you identify only after price action completes. The real challenge is identifying the right price actions before taking the trade. Why we can't identify? Because we are limiting ourselves up to 5 minutes time frame. That is the main reason. Moreover, the targets we limited to 15 minutes targets. Here we have a new 15 minutes target. This new 15 minutes target at the distal line, we have a 3 minutes fine-tuned 3 minute zone is there at distal line. That is the origin for this entire newly created 15 minute zone. But anyway, till this 15 minute zone, from here to here, we got a profit 3,248, which is 1.9% ROI. At least you would have recovered your loss. Apart from that, you would have got maybe another 1,500 rupees profit you would have got. Okay, maybe small profit ultimately after recovering the loss, but whatever it is, whether it is small or big, profit is a profit. So these are the 2 trades we have seen in NBCC. And there is one more, Canara Bank Financial Home Services. This is a 75 minutes high liquidity zone. We have a rally with even hidden body is also there. Rally, 1, 2, 3, 4 base candles. Again a rally candle. See, today this zone is violated. Why it is violated? What is the reason? Let us look into this. This 75 minute zone is having a 15 minute zone origin. You see here? This is a rally candle, base candle, rally candle with hidden body. A big body you will get. So it is a rally base rally. This is the 15 minute zone. is an horizon to the center, (75 minutes) high liquidity zone. Okay, but within this 15 minutes again you should identify a 5 minutes fine-tuned zone. Let's go to the 5 minutes time frame. So 5 minutes we have drop candle, you have 1, 2, 3 base candles and again a rally candle. See, it touched multiple, already tested once, second time it is tested, third time it is tested. That means this zone is also acting as a high liquidity zone. This 5 minutes horizon, this drop base rally is also acting as a high liquidity zone. Already tested several times, first, second, third. And yesterday means last Friday. Prices again entered into this zone. See, Friday, the last trading session. Friday is our last trading session. It gave, and after that you see it gave a very good move. Huge profit it has given. See how sharply prices moved up on Friday. So that means this zone already gave good profit. Okay, one more time, is it going to give? It may give or it may not give. If anybody would have taken a trade, your trade would have been stopped out today. Today this zone is violated. Okay, prices entered deep. For some small movement it is given, it is not good enough. After that it stayed here, maybe within the stop buffer area. Sometime it would have stayed. And finally completely the zone is gone. So if anybody would have taken a trade, your trade would have been stopped out. You have to accept. But earlier, if anybody would have identified this zone and took a trade, you would have enjoyed this profit. Okay, performance point of view, this zone already gave a good performance previously. Now, next time onwards, it may work or it may not work. But generally, high liquidity zones, what is the characteristic? Until it gives the profits, we will enjoy. The day when it is violated, we just ignore that small stop loss, whatever it will give. Compare it to the profits we got earlier. So anyway, we can't consider for the performance point of view. The reason is already it gave a good profit earlier. Next time onwards, we don't know when it is going to violate it. Today it happened to be an expiry date for this zone. So this is about Canfin Home Financials. And next one is Godrej. Godrej is also a 75 minutes high liquidity zone, but supply zone it is. Let's go to the 75 minutes time frame. So we have a drop base drop. This is the 75 minute zone. Let's go to the 15 minutes time frame. 15 minutes time frame, you have a rally, you have 3 base candles and a drop candle. This is the 15 minute zone. But have you noticed, is there any fine-tuned 5 minutes inside? No. Why? Let's get into the 5 minutes time frame. See the 5 minute zone. What is happened here? 5 minutes. Maybe this is a failed ERC, that way you can consider drop candle, base candles 1, 2, 3, 4, 5, 6, 7, 8. You have 8 base candles. Even if you consider this as a base candle, then you have a rally 1, 2, 3, 4, 5, 8, 9, 10, total 9, 10. Either way, the candles are more than 6, whatever the way you consider. There are higher chances this zone will be violated. See, a lot of consolidation took place here. That means all the order flow would have been gone. So that is the reason why we didn't plan. But today morning 9:15 candle. See, this is 9:15. Even 1 minute candle also it is the same. Look into 1 minute chart. You might be wondering how it is possible. From here prices went and again came down, closed. And then rest of the day prices moved but did not go up. Maybe it could be a freak trade. Because sometimes in the exchange in the morning 1 minute, there are higher chances, some false trades, maybe just 1 trade or 2 trades. can happen. We call them as freak trades. Just one trade, just because of that one stock might have been executed, two stocks might have been executed. Your charts will display the charts like this. Maybe that could be the reason. Or maybe demand is not there anyway, supply is not there. Morning 9:15 demand might have pushed so sharp and again came down. That also might happen. Anything, but remember, anything could be the reason. But anyway, this is the zone anyway. We didn't plan. We know the zone will be violated. Now it is looking like a pierced zone now because of this price action. This is the biggest problem. Sometimes if any data due to freak trades, they reflect in the charts. Sometimes it will impact our chart analysis. See, we can't use this chart. Maybe future again prices will come, get into this. Institutions create a new 15-minute zone, in that a new fine-tuned 5-minute zone, and push the prices down. Next time prices will reach here. Can you plan your trade here? No, because this zone is a pierced zone. We won't use the pierced high liquidity zones. High liquidity zone strategy, zone should not be pierced. At the time you will be missing this trade opportunity, right? Just because of these freak trades. That means a wrong data on the charts that is displaying, that is impacting our algorithm. Of course, software also will consider this zone is not a complete zone. It will consider this as a pierced zone. But do you know, we cleverly defined a concept called pierced zone strategies. Pierced zone is a new concept I introduced in supply demand zone price action. You already learned your pierced zone in phase 1 training. Because I have introduced different types: tested zone, fresh zone, violated zone. In that category, I introduced a new concept, pierced zone. And in lesson 28, you learned pierced zone strategies. So such kind of strategies will help you. Even if any of the zones are violated or maybe pierced because of the freak trades, still you get trade opportunities next time. When prices enter here, strong order flow created institutions pushed the market down. Next time again, once again prices retraces back. At the time, pierced zone strategy point of view, you may look into those new order flows. That way you can plan your trades. See, that is the advantage. One main advantage of the pierced zone strategy is these freak trades, whatever that happened in the exchange. We are addressing that problem. That is what you have to understand. But HLQ zone strategy we can't use. Please remember, now this whatever you want to plan any trade in this zone in future, within this zone, that should be only as per the pierced zones only. Pierced zone, you learn 3 categories. The third category, new order flows within the pierced zone. Based on that, next time you can plan. Anyway, now you can't plan anything. Next time prices reach, new order flows are created and then push to the market. If that happens, in the next retracement, as per the pierced zone strategy, you can plan your trades. So pierced zone is a real solution to address the problem freak trades, but not HLQ zone strategy. We want our HLQ zone strategy should be very clean and neat. We don't want to take any additional risk factors by introducing pierced zones into HLQ zone. So I want to separate both the strategies. Why? Because HLQ zone, at least we are claiming 80% success rate. When you want to get such kind of a huge success rate, our zone should be very clean and neat. Any doubtful zones we should not include in the zone strategy. Otherwise, getting that much success rate is not possible. Even if you miss this stock, not a problem. Because you will be having opportunities from other stocks. Because every day we are getting good number of stocks, maybe 3 or 4, sometimes we are getting 10, 11 also. Sometimes only one HLQ zone we get, and we have seen in the past. But that zone gave you the success. Such kind of trades also we have seen in the past. You are going to see in future also. And the last one is OFSS. This is a daily high liquidity supply zone. There were no daily demand zones. Let me go to the daily time frame. This is a daily supply zone. However, software identified this as a failed ERC as a drop. This is a leg-in. You have 1, 2, 3 base candles and then a drop candle. This is how software identified. After that, prices came inside, again came down. At the time, again new order flows are created. Let us look into them. Go to 75 minutes time frame. We have 2 order flows in the 75. This is a drop base drop. This is a drop base drop. It is not very convincing, right? Looking. Let me hide the candles, then you will get convinced. Now drop base, big candle, drop candle. See here, drop base, drop. Okay. Even then it is clear, drop base, drop. Even I left this in first analysis. Again I revisited and again I saw something is here. Then I have drawn this zone. Then interesting order flows I identified after that. But anyway, today we didn't get trades, but the analysis is important, right? So that way we have 2 order flows, drop base drop and this drop base drop from 75 minutes time frame. Okay, now let's go to the 15 minutes time frame. In the 15 minutes the order flows are very clear in this area, but before that here we have a drop candle, we have 3 base candles and then again a drop candle. Within this first 75 minutes zone, this is the fine-tuned 15 minutes zone. Okay, what about here? Here you have, see this failed ERC candle as a rally, you have a base candle, you have a drop candle. So this entire thing, 15 minutes zone, rally, base, drop. This rally is a dynamic view. Dynamic view, it is a rally, base, drop. So we have 2 15 minutes order flows. Now let's go to the 5 minutes time frame. In the 5 minutes time frame, here you have, let me hide this big candle, you will get better clarity. See, here you have a rally candle, 2 base candles and then a drop candle. High explosive leg out candle. And also did you see the pro gap? Small pro gap is also there. Suppose if the risk is within our accepted limit, you can also draw zone like this. Because pro gap is there, sometimes pro gap may not let the prices. If the risk is within your accepted limit, otherwise no other option, you have to draw the zone like this. Or otherwise you keep some entry buffer and that way you plan your trade to manage the risk. Okay, this is a fine-tuned 5 minute zone. And what else? Here also we have a fine-tuned 5 minute zone. Drop, base, drop. Did you notice this zone is already tested? But did you observe? Rally candle, base candle, again another base candle, but this is looking like a medium size leg also. Anyway, we have 2 candles, base candles and then a drop candle, rally, base, drop. What is this concept? LOTL concept. And in this newly created zone, again added a new order flow in this area. Maybe this could be active, maybe it may behave like a high liquidity zone in the coming days. I'm using the word maybe, I'm not confirming. Why maybe? Because we have confidence only 80%, not 100% to confirm this is a high liquidity. But possibility is there because new order flows. So once again, next time prices may enter here and again it may give you push the prices. That way you can plan another trade in this zone. Even though it is a tested zone, still you can take some risk because this has given some kind of confirmation. Maybe it could be. Maybe. I'm saying maybe. There is a possibility it will be violated. That possibility is also there. But those who wants to take extra risk may consider high liquidity. But zone point of view, it already gave a performance. It gave a success. It gave a test, and after that you see it gave a big move. Even though it is tested zone, we are assuming it could be a high liquidity. It could be because of this LOTL scenario. See, LOTL scenario does not confirm it is a high liquidity zone. But possibility is there. Please remember. Only NeoStock software only confirm it is a high liquidity. Some zone even software can't confirm. After that in future, by understanding the price action that is taking place in future near the zone, at the time it may confirm. Sometimes during the fresh zone itself it will confirm it is a high liquidity zone. Okay. Apart from that, you have noticed there is one more rally candle, failed ERC, 2 base candles and a drop candle. This 5-minute zone is acting as an LTF, lower time frame zone, as an horizon to the 75 minutes fine-tuned zone inside daily high liquidity zone. This is the 75 minutes fine-tuned 75 minute zone. For this 75 minute zone, we have a horizon. Inside 75 again we have 15 minutes fine-tuned zone is there. For both 15 minutes and 75 minutes, this 5-minute zone is acting as an horizon. Because from here it picked up the orders and then sharply it moved down. Moreover, it was tested earlier. While testing, have you noticed rally base drop? A new order flows are added here. Maybe it could be acting as a high liquidity. Now another thing, we confirmed it is a lower time frame zone, horizon to the higher time frame zone. That way you can plan a trade in this area also. So this is how we fine-tuned this zone, but today we did not get the trades. Okay, this is about the high liquidity zones identified from our previous report. Hope this information and analysis will be helpful to you to learn some new concepts or understanding fine-tuning the zones in much better. Let us all meet again in our next video. Thank you.